everybody to the Movement Mortgage News headquarters. And with the current media bluster, we figure this would be a great setting for today's topic. So, have you seen the news this week about mortgage rates? Yes, they have been steadily increasing since the beginning of the year, but watch out for all of this media hype that is trying to make it sound like the world is ending. If you are more interested in what affects your interest rates, check out that specific video here or the other videos on our channel. And as we can see in this chart here from Freddie Mac, the rates down below 5% were actually the abnormal. I mean, sure, they have been low recently, but before around 2011, 2012, they were sometimes much higher. So technically, we are just getting back to more of a normal real estate market. It is not the end of the world. But in light of this, there is some good news. Monthly payment is really what matters most, and home prices aren't going to magically drop. Inventory is still low, and there are still more buyers than houses available. The market will certainly soften a bit, and it already is, which means less multiple offer situations. So it will become easier for buyers to actually have a chance at getting their offers accepted. So for you buyers, make sure that you are educated properly to stay informed and in the game and not scared by all of this media hype. It is not the worst time to buy ever. I can't state that enough. In fact, it is still a great time to buy. This is why you should be following the Tardif team, talking to us about your home buying goals and opportunities. Now, real estate is arguably the safest investment, especially with the current state of the stock market. Being as crazy as that is, buying a home that will appreciate in value year over year will always beat renting. Just think about it this way. You are probably already paying for a mortgage, but is it for your own house or is it for your landlord's? The longer you wait to buy in this market, the higher the cost will be. You can always refinance into an interest rate, but you can't go back 2 to 3 years and buy a home for $50,000 less. Look at this example. This chart here shows an example of a $300,000 home. And here we see that this means if you waited just 1 year to buy, your mortgage payment could be almost $200 a month more. Waiting 3 years, your payment could be about $500 more. So if you qualify for a certain payment on that $300,000 house this year, are you sure you will qualify for $200 more next year or $500 more in 3 years? Or will that mean you would need to look at a smaller house in general? Also, in this second chart, in just 1 year, based on typical appreciation, now not the crazy appreciation that we've seen in the past couple of years, this home could be about $22,000 more. Or in 3 years, it could be worth over $50,000 more. This is how home ownership can help to build long-term wealth. So in closing, make sure to subscribe to our channel, like this video, and click that bell icon to stay up to date on all of our future videos. Also follow us on our social media like Facebook and Instagram, and remember, do not panic with all of this media overblowing the state of the market. Contact us at the Tardif team to get your pre-approval today so that you can go out and get into your home now and start building that home wealth. See you next week.